This podcast is for professional investors only.
The most consequential election in a year filled with important elections is concluding as we record this.
Welcome to a new episode of the Robeco podcast.
The outcome of the 2024 US election is likely to bring extensive change to global geopolitics, economics and financial markets, both in the short term and the long term. My guests to discuss what it all means for investors are Colin Graham, he's head of Robeco's Sustainable Multi-Assets team, and Lauren Mariano, who's a portfolio manager in Robeco's Global Macro Fixed Income team. Welcome, both of you. I know it's been a long night or a short night, and so good to have your perspectives at this time.
Thanks, Erica.
Thanks, Erica.
Well, it's now 10 a.m. Central European time on Wednesday, 6 November, and the verdict on the election is not yet final, but it certainly looks as though the US now has a Republican president. Critical here is whether the Republicans will control both chambers of Congress and therefore whether they'll be able to pass any new legislation with ease. Colin, what are your expectations in this regard?
Well, I think if you look for now, the Senate has gone to Republican, and if you have a Republican president, then that means that their agenda will be more open to their policies. So from that perspective, I think that if the House becomes Democratic, then that will, if you like, pare back some of the more extreme views that we've heard in the campaign. However, if we get a red wave, a red sweep, and the Republicans have the votes in all the houses, both parts of the Senate and the House, then you can see more extreme views coming forward. I don't know, Lauren, what were your thoughts?
Yeah, I agree. I think if we do get a red sweep, it increases the likelihood of this market volatility perhaps to continue and weakness, specifically in the bond market, to further play out in the next few weeks ahead as markets begin to digest what exactly this scenario of Trump with both control in his party, both control of the Houses and Senate, what that means for him and how drastic his policy will be and what he will actually implement.
Yeah. And markets hate the uncertainty, and once they know what the situation is, then markets will calm down.
Mm-hmm. And we've had a lot of volatility, right? So that calmness would be welcome.
Definitely.
So what do the election results mean for US policy? Trump has been extremely vocal and outspoken on his plans. One of the notable aspects of change will be US relations with the rest of the world, and that includes trade and political relations. And the second is a likely shift in fiscal policy. So Colin, let's start with the global relations, and that includes tariff policy. What are the key changes that could shape market outcomes?
Well, we know from the previous Trump presidency that tariffs are front and center of his policy. So we should expect Trump to raise tariffs, and it will probably be a case of start with who is front and center, and that will be China. So you can see that coming forward, but I wouldn't necessarily worry that it's going to be as high as some of the media has reported over the last few months. However, you should remember that tariffs remain a negotiation tool. So if you have a trade surplus with the US, then you can obviously buy more US goods to offset that. So, that's the way it worked before. So that's how we expect it to be working going forward. On the other side, in terms of the geopolitical side of things, then this is where it becomes more fractious. And again, we're not sure, and we don't want to speculate on how Trump will treat the various regional conflicts going on in the world at the moment. And that's something we'll have to find out later on.
Mm-hmm. Then Lauren, on fiscal policy, and of course tariff policy feeds into that. What are the likely changes here?
Well, heading into today's election, regardless of who is going to win, it was widely expected by most of us here in markets that both candidates are expected to not improve the fiscal situation in the U.S. anytime soon. Both didn't appear concerned about decreasing the deficit over the next few years. We could see that through the policies that they suggested to implement. But one thing we do know, based on various organizations and research hubs, that Trump's proposed agenda is expected to increase the deficit by more than Harris's, and especially in the event of a red wave. Like we said before, if he has control of both houses in Congress, he'll be able to pass legislation through easier, which will mean more stimulus, more spending, and the deficit in the U.S. will continue to widen. This will mainly be driven as well by the extension of the 2017 tax cuts under the Tax Cuts and Jobs Act that he has proposed to further extend some of them to make more permanent. This will be offset, obviously, by some of those tariffs that he intends to implement, but still, it will be probably the most fiscal expansionary scenario we'll see under all the different outcomes we could have had.
So to be clear, asking this to either of you, what would be the implications for inflation further down the line? Because inflation was a key electioneering topic for in particular for President Trump.
Well, I think that the benign disinflation we've seen over the last couple of years, post-COVID, will start to disappear. We see tariffs and other policies as being inflationary. So from that perspective, then nominal growth will go up, so the overall economy will be fine, but the split between real growth and inflation will start to deteriorate.
Right. Well, let's take what you've said. You've laid the groundwork. Let's look at some of the key asset classes and just hear what you believe will be the consequences for those asset classes, starting with the US dollar.
I'll take that one. It's a tricky one, but also probably the easiest one to talk about at the moment, because you could see as Trump's polling got better and better, the dollar started to strengthen.
Okay.
And we've seen this morning that the dollar has jumped significantly against currencies. So the tariffs, the strong dollar policy, higher rates for longer, these all lead to capital flows into the US and the demand for dollar. So the scarcity of dollar will hurt the rest of the world, but will be fine for the US.
Lauren, your area of focus, fixed income markets, what are the consequences?
So the consequences of Trump winning the presidential election, as well as Republicans winning both parts of Congress, are likely to have a negative impact on the U.S. yields, and the curve will likely steepen. We've already seen this play out so far in the reaction as the polls leading into today, as well as the vote counts that were released over the past few hours, signaled that Trump would likely take the presidency. So, as you said before, his fiscal expansion expected under President Trump, especially in a red wave scenario, will weigh on the yields in the U.S., and the curve will likely steepen further, led by the back end.
So improving the relative attractiveness of European fixed income markets, Lauren, would you say that?
Yes, that's right. And we're seeing that so far this morning. Front-end European rates, last time I looked, were outperforming against the U.S. front end. And they initially react lower on the day as markets suspected that the prospects of the tariffs that Trump could introduce would be bad news for the European economy. So that could introduce pressure on the ECB to cut rates further.
Right. And then, Colin, equity markets, it's a very broad topic, US equity markets, but then also globally.
So everybody over the last few years has talked about how expensive the US market is, the equity market is. And under this new presidency, we would expect that to continue. US exceptionalism will continue. The draw of capital, the innovation that comes out of the US versus the rest of the world will continue to draw equity investors. So, I was joking this morning with somebody saying, well, actually, from an asset allocation perspective in equity markets, it makes it a lot easier because, US is going to outperform. Right. But there are going to be pockets around the world that will do well as well. So if you think of more domestically orientated sectors like banks, they'll do well in Asia and Europe. If you look at countries where they provide strategic resources into the US, they will probably dodge a lot of the tariffs. If you can strike a deal to buy US energy, which again Europe's in that camp, then we know Trump's policies on the energy, so there's going to be plenty of it. So plenty of oil, plenty of gas. So if you can strike a deal to buy more energy from the US, then obviously your tariff, your expected tariff load will start to fall.
And then very briefly, the final asset class, commodities, what are the consequences?
Yes, this is probably where you're going to have the most impact, because we would suspect that Trump will roll back the subsidies for the energy transition and the green subsidies, and this could severely affect some of the energy transition companies, given that they were going to be getting funding from the US government. So some sectors, some metals will be difficult to see an upside to. Oil, you expect to stay in oversupply. So the one sort of shining beacon in there is probably the gold.
Colin and Lauren, thank you so much for your insights. We'll be in touch soon.
Thank you very much.
Thank you.
Thanks for joining this Robeco podcast. Please tune in next time as well. Important information. This publication is intended for professional investors. The podcast was brought to you by Robeco and in the US by Robeco Institutional Asset Management US Inc., a Delaware corporation, as well as an investment advisor registered with the US Securities and Exchange Commission. Robeco Institutional Asset Management US is a wholly owned subsidiary of Oryx Corporation Europe NV, a Dutch investment management firm located in Rotterdam, the Netherlands. Robeco Institutional Asset Management BV has a license as manager of UCITS and AIFs for the Netherlands Authority for the Financial Markets in Amsterdam.